Hello traders and welcome back to the Forex Geek, where we dive deep into the tools that can help you make smarter trading decisions. In today's video, we are going to explore the Ichimoku Day Trading Strategy, which is a comprehensive approach that helps you analyze market trends, momentum, and key levels all in one glance. So stay with me until the end as I guide you step by step on how to use this strategy effectively in your day trading. First of all, we'll start with what is the Ichimoku Day Trading Strategy. But before we get to that, I'll have to add the indicator Ichimoku Cloud. Now we're talking about day trading, so we are on the 1 hour time frame on Euro USD. So the Ichimoku Day Trading Strategy is built around the Ichimoku Cloud, and this is a technical indicator designed to give you a complete view of market conditions in a single glance. It consists of 5 key components, each with a specific role in analyzing trends, momentum, and support or resistance levels. These components they work together to help you understand the market's current state, historical context, and potential future movements. The first two lines are the conversion and baseline, and these are the blue and the brown line. As you can see, the blue line is the conversion line, the brown line is the baseline. And the conversion line is calculated using the highest high and lowest low over the past 9 periods, while the baseline does the same over the past 26 periods. And these lines act like moving averages but are more dynamic, helping you gauge short and medium term momentum. When the conversion line moves above the baseline, it often signals a bullish momentum and vice versa for bearish momentum. Just like as you can see on the chart, the conversion line is above the baseline, and you can see that we are bullish at the moment. So the next component is the lagging span, and this span plots the current closing price 26 periods back. This line helps you compare the present price action. This is the lagging span, the green line. It helps you compare the present price action to past levels, offering insights into potential support and resistance zones. Now, the most distinctive feature of this strategy is the cloud or Kumo. Now, the cloud is made up of the span A, leading span A, and leading span B. Now, this span A is the average of the conversion and the baselines, while span B uses the highest high and lowest low over 52 periods. And that makes up the span A and span B, and together they make up the cloud. And this cloud is very important because when prices are above the cloud, it indicates an uptrend, and when it's below, it signals a downtrend. The cloud's thickness reflects trend strength. Thicker clouds suggest stronger support or resistance zones, just like this thicker bullish cloud, while thinner clouds suggest increasing market volatility or indecision in the market. And each component of the Ichimoku Cloud works together to provide a clear picture of market dynamics. I believe I've explained all of the components and how they can be used in the market. By understanding these elements individually and as a system, you can analyze trends and prepare for potential market shifts within the day with greater confidence. So how can we apply this Ichimoku Cloud indicator to our day trading? Now that's where I'll talk about the Ichimoku Day Trading Strategy. The first step is to determine the overall trend by analyzing the price action in relation to the cloud. Remember, I told you that once price is above the cloud, it signals an uptrend, and when it's below it, the market is in a downtrend. So if the price is inside the cloud, it indicates consolidation or uncertainty, and it's better to wait for a clearer signal, just like you have happening right here. This consolidation and uncertainty happening here, you can see price is mostly inside the cloud, in and out, no perfect break above it. That shows that we are consolidating and there's no clear trend in the market. Now, once you've identified the trend, look for a crossover between the Tenkan-sen. As you can see, we had the crossover here. Price breaking above the cloud shows us that we are bullish, and we have the crossover between the conversion line and the baseline. Conversion line is the blue line, remember, and the brown line is the baseline. Now we have the conversion line crossing above the baseline, showing us that this is a bullish signal and we should be looking to buy. For bearish signals, the baseline should cross above the conversion line and we should be looking to sell. Look for a similar bearish signal just as we have for the bullish. Okay, we have one here. Now you have your cross happening around here. Okay, let me get a better example. We can see this one, we have our cross happening here. That is our bearish cross. We also have price being below the cloud here, and this is for a bearish example. Now this gives us the confirmation that yes, indeed we are bearish. The next confirmation you should look out for day trading is the Chikou Span, which is the lagging span, and this provides confirmation for your trades. Check if this line is positioned above or below price depending on the market direction, the breakout which you are trading. For example, we are in a bearish trend, so we should check out for this green line being below price, as it gives us an extra confirmation that yes, we are bearish. If it's above price, then I would advise you not to take the trade, as market may not have completely switched its direction from bearish to bullish, or maybe we are not in a completely bullish or bearish trend. In this case, bearish trend. So you can see all our confirmations, all our criteria have been met. Price is below the cloud. Price has given us the conversion line, and the baseline has given us the crossover, and also the lagging span is below price. So just look for avenues to take our entries. You could take your entry based on break of market structure shift to the downside. We have several market structure shifts to the downside here. So just look to take our sell trades from these areas and just look to place our sell trades here, and we just trade it all the way down. You can also look out for buy setups. For example, we have one here. We have the break above the cloud, we have the crossover, and we are looking for opportunities to enter. Now the next break of market structure shift we have here is this to the upside, and that is an indication that yes, we are indeed bullish and we should be looking to take our buy trades. Stop loss below this swing low, take profits all the way, and let me look for that our bearish trade. Remember our bearish trade which I was talking about. This is it here. We have multiple breaks to the downside, signaling that indeed we are bearish and we should be looking to sell. Just take a sell trade here, stop loss above that swing high, take profits all the way down. Now risk management is essential when you're using this strategy. Please place your stop loss orders based on key levels, such as uh, below the cloud for long trades or just above it for short trades. You could also use just above swing highs and swing lows for your stop loss. But since we are using the Ichimoku, place it above the cloud, whichever one works for you, but ensure that you give your stop loss enough breathing room just in case price decides to be very volatile and reverse on you, not get stopped out easily. The cloud itself acts as dynamic support or resistance zone, so its edges are useful for setting protective stops. And for breakout trades, monitor price action around the cloud's edges. A breakout above a green cloud signals a potential upward continuation, just like we had in our buy trade example here. And a break below suggests further downward movement. So enter only after the market structure shift and only after a strong candle closes beyond the cloud to confirm momentum. I would suggest you enter after a market structure shift after the close above the cloud. And now we entered during the day. This was on 4th March on a Tuesday, and we left this trade that same day around 18 hours after the day's open, and this is perfect for day trading. So if you're a day trader, you can consider following these steps systematically. The first step is identifying the trends, spotting crossovers, confirming with the lagging span, and managing your risk, which is the most important. You can apply the Ichimoku Day Trading Strategy effectively in various market conditions. Alright traders, you've come to the end of today's video. Engage with us in the comments below. We want to hear about your experiences. If you found this video helpful, don't forget to like, subscribe and turn on the notification bell so you never miss out on more trading tips and strategies. Thanks for watching and I'll see you in the next video.